Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, December the 28th. The year's 2021. Let's talk trading. Keeping it simple. Pull the trigger. These videos are for educational purposes only. Your results may differ from mine. Pull the trigger. You see your entry conditions are met. Just pull the trigger. There's no more thought involved. You see, part of keeping it simple is not thinking when you're trading. It's more reacting. You've already developed your method. You've already done your practice, if you want your back testing, your statistical analysis. You've marked up charts, or maybe you've done it all, maybe you've done some of it, maybe you got a totally different way. But the point being is, when it comes time to pull the trigger, just pull the trigger. I mean, you're either going to win or lose, so you already know what the outcome is. And as long as you have your stop loss in place, there's really nothing that could go wrong, unless, of course, you have a power outage, or the broker does. Somehow you lose your connection, or something happens in the market and there's some really, big move. But, those are black swan events. But on your normal, everyday, day-to-day, sometimes news-driven moves, you've got nothing to worry about if you have your stop loss in place. And the thing is, it's going to get hit. You just don't know if it's going to get hit on this trade or the next trade or 10 trades from now or the next 2 or 3 trades. But we're not in it for one trade. Each trade is not life or death. At least it shouldn't be. If you have your stop loss, then it's not a life or death situation. But some traders look at each trade as it has to be a winner, it has to be a winner. And I'm not sure why. I mean, this is part of the brain management. Because if every trade has to be a winner and you're experiencing pain, that's your reaction to the loss. Now, I know I haven't brought out this screen in a while, but when it comes to pulling the trigger, you don't want to have any of these regrets. You don't want to have a regret of missing out because you failed to pull the trigger when you were sitting right there and you could have pulled the trigger. And then on the other side, when you get out of the trade and you take your 2 pips or your 5 pips or your 10 or your 20, and then price continues in that direction, you don't want to have any regret of getting out. You executed your trade. You, as Walmart would put it, you've got more pips now than when you started, so you got nothing to complain about. So when it comes to trading and your method, whether it's something you've learned from me, adapted from me, or somebody else, just pull the trigger. Make sure your stop is there, and you should do okay. Once again, these videos are for educational purposes only, and your results will be different from mine. So let's move on and look at the rest of the charts. Looking at the monthly, we've got a green month and we're only 10 pips off the high, but we're 291 pips off the low. So we're starting to get some range here on this monthly. And I think I pointed out there was an imbalance here. And as you can see, we filled that imbalance. And for those of you who don't know what imbalance is, just briefly, the distance between this high and, or rather, sorry, this low and then the close is an imbalance, because in other words, price moved down here. So this was all sellers. Now you have to go back up to hit this high point. I'm sorry, this low. Come up to this low right here to take out the imbalance. So if you look, you can see right here, this low came and hit this high, so it took out the imbalance. So I don't see any imbalances left for the year. Okay, on the weekly, you can see we broke above the previous week's high, which is something I had mentioned in a video. I think it was either end of last week or maybe it was earlier this week. I don't remember, but I did say something about if price got to that high, look to go long. And it's just a simple breakout trade. So for today, yesterday we put in the opening range. You see we opened inside the opening range. We hit yesterday's high and we moved above it. So there was about 15, 16 pips of profit there if you nailed that trade. And one of the things to note was it went into the 40s, which I like to call a launch pad. It seems when price moves up to the 40s, it continues through the 40s and usually hits 60 or better. And today it hit 61. But on the other hand, if price moves down to the 40s, it's going the wrong way, and that usually it doesn't launch. The year, we're only 193 pips away from the open. We've got probably the rest of today, Wednesday and Thursday. Friday's probably going to be a scratch day because it's New Year's Eve. I think the traders are going to want to go out and celebrate. But we're 154 pips over the monthly open, 59 over the weekly. So now, I think yesterday I said something about we're at that inside bar, near that inside bar low of 2 months ago, and you can see it actually went down. Price crossed below and then crossed back above. So we are inside the weekly inside bar right now. So a 35.13 would be a breakout to the upside, but the monthly inside bar 34.33 would be a breakout of that inside bar to the downside. And I think I mentioned yesterday there was lots of inside bar action to be had if you liked that simple horizontal line trade. Range though today, it's only 33 pips. So maybe everybody's taking an early holiday. I think it still might be a bank holiday over there in London. The buy zone, you can see price just didn't want to go short. Just didn't want to drop here. On the daily open, there's a nice crossover there. Buy zone paid off. So we still have about 7 hours or so left in the day. Anything can happen, so we'll just have to wait and see. Rats with 33 pips, you know there's no rat zone trades. Pivot trading plan. We opened above the pivot. They said R1 bias is short. So we got near it and prices pulled back. Missed pivots on the monthly, none. On the weekly, we've missed the pivot. Right now we're 110 pips away. On the daily, we've missed the pivot. And it looks like we missed by, today's the 28th, we missed by 4.4. but if you traded towards the pivot, it filled 12.1, so there was still money to be made off of the open. In and out of the upper wick zone, and you can see in and out at the bottom, in and out at the top. And you can see here on the H1, notice the H1 wick zone here. There's the previous wick zone. Price failed to break out of it, hit the top of this wick zone here, started coming down, and then got into the body of the hour, and then price covered that candle and then some. So notice here, price went up, price came down, covered the candle. Price went up again, covered the candle, price came down again, covered the candle. What does that tell you? It tells you price is ranging. And from here to here is an imbalance on the H1 chart. So you can see here, there's no imbalances. Price is just covering. So price needs to get down to the high, which is 134.39. It's only about 3 pips or so, 4 pips away to cover that imbalance. On the higher low, lower high scalper, you can see here a few minutes ago we had a 3-ball at the bottom. Price came up, did a 50% retrace at least, actually a little bit more, and then came back down. So I know somebody's going to want to know what indicators I have on the chart, but the main one to use for this one is the TRO dynamic fib support resistance, which will plot the fib diamonds here, and it will also give you the gauge, and right there 39. I think what did I say, 39.4. We've got a low of 39.9, so we're getting in the ballpark there. 39.8, 39.0, imbalance filled. So that's just part of reading the chart. And notice I don't have the imbalance indicator, but once you learn these things, you can see them without the indicators. So from when I called that could have been a nice 3 or 4 pip scalp if you were so inclined. On the Walmart lines, and somebody asked why I switched over to the pound. It was because Walmart was trading the pound, I was trading the yen. I was working with him, kind of refining this method. His method wrote some indicators earlier in the year, and the pound is one of the best pairs to trade his method on. So that's why I switched it. It's like it didn't matter to me. To me, trading's trading. Trade just about anything if you can chart it. So you just have to find the tool that works with the pair, or find the pairs that work with the tool. Either way. More of the tick chart here. You can see that. Oh, hold on just a second. I got to get out of here. So fellow traders, pull the trigger, because remember, it's not what you trade. It's how you trade it. So drain the banks, RumpleOne.